This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look at the gold market. On the gold market, price has shown the appreciation to the upside as on the other markets. On the non-farm payrolls release that many traders and analysts treat as a negative for United States dollar, but my thought is just this reaction on so-called negative non-farm payrolls a bit overestimated. So I think that the payrolls, although they were released for 40,000 less than was expected, but the August non-farm payrolls were revised to the upside for the same 40,000, and in fact by the result of the 2 months we have precisely the amount of the new job places that coincide with the economist forecasts. And I think that these payrolls are not as negative as they were treated yesterday, and probably in the nearest couple of weeks the reassessment of this data will come. Besides, guys, within the week we will have the gross domestic product released, the preliminary data for the third quarter, and I think that based on this gross domestic product data, based on these non-farm payrolls, the Fed Reserve will make the decision on quantitative easing program. Well, I have some feelings that we still will hear some changing in the rhetoric that will change in advance in favor of quantitative easing tapering. I don't want to say that the Federal Reserve will announce just the closing quantitative easing program, because this will be a true extreme decision. But some speech in favor of tapering of the quantitative easing program, the contraction of this program, probably will be made. Well, that's just my thought, my opinion on the current market. And I think that this action to the upside is too early to treat it as the just upward trend continuation. That is, by my thought, it's just too positive reaction on the gold market, on the data. And I think that's a bit really overestimated to the upside. Well, but that's mostly the strategical issues. Speaking on the tactical issues and the very short-term perspective within the current week, and particularly till the end of the current week, we probably could say that gold market still could show some splash up, some small continuation, because first of all, at least by the LPR UK data, we see that market hasn't quite hit the monthly pivot point, just with some sense. And that probably tells us that market could continue move higher. Now market not at overbought. It has the free space right to the upside. Besides, if you remember our weekly analysis, this upward action to the upside mostly based as on the bullish engulfing pattern that has appeared here. And what is more important, that pattern on the weekly time frame is the bullish stop grabber that suggests some higher move, greater move to the upside. Something to 1350, 1360 area probably should be hit by the market to accomplish the minimum target of the stop grabber. So that leads us to conclusion that probably if any retracement will happen here in the short-term perspective today, tomorrow, that retracement should not be too extended to the downside, and market should show another leg to the upside for 15, maybe $20 to the upside. That's also possible. Well, if we will take a look at the levels that we have now on the 4-hour time frame chart, also guys, take a look that we're now at weekly pivot resistance 1, so some retracement is possible. Well, I probably will keep an eye on this level, maybe even on the higher, on the upper border of this confluence support, if we could call this the confluence support, 1318, 1323 area, because the habit of the gold market is to revisit the broken consolidations. So we have here consolidation that has been broken to the upside, so retesting of it and then continuation to the upside seems logical for me. That will be normal retracement, not too deep, not too small, for continuation to the upside when the market hasn't quite hit any significant targets and just some intermediate retracement between the targets. Because our major target stands slightly higher, that is the monthly pivot point and the target of the stop grabber pattern on the weekly time frame. Because retracement below this consolidation will be too extended, and in this case market will show the swing that is greater to the downside than swing to the upside. That will be more looking like the short-term reversal rather than the retracement. But retracement right to the previous consolidation seems logical for me, and market still could show the move to the 1355, 1360 area probably in the short-term perspective within the week before the gross domestic product data. So that's the scenario that I will be looking for, and based on this scenario we probably could try to look for bullish patterns that could be formed around this area, around this confluence support on the hourly time frame chart. That is possible. So one thing that, as usual, we do not want to see the nasty black candles to the downside, especially the raising of this thrust up. So we need some gradual action, maybe due to some patterns that will be formed here right at the top, because currently I do not see any, since market just has hit this level. Well, and since major targets haven't been hit yet, we probably could count on the possible continuation to the upside somewhere from this area.